Hi, this is Jack from AlphaCharts365 with a State of the Market update. Today is February 15th, 2020, and before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and your risk tolerance. Okay, so we're starting with the SPX. As you can see, we went through this big consolidation area, broke out, and we are trending higher. We closed right at all-time highs. Again, all the moving averages are moving in the direction, which is from the bottom left to the top right. And so as much as there's a lot of people out there calling tops right now, again, closing all-time highs, it's tough to call a top because we could have called this an all-time high, right? We could, a lot of tops were being called here with this, and then, tops we called here, tops we called here. So I don't think that we're in a position right now to call a top. Moving on to the Qs, same thing, closed at all-time highs. Again, looks almost exactly the same as the SPX. The IWM does look a little bit different. Again, we're kind of still trapped underneath this area of supply. But it was kind of nice to see that even though we kind of retested down here, we are still having the moving averages moving higher. So I would not be surprised if this breaks out above that 172-ish range and IWM begins to participate in this move. Looking at the Dow Jones composite average, right near all-time highs. And again, looks very similar to the other charts. I look at this as more of a choppy range that this is in and just a healthy consolidation from this move up. Remember, so we can consolidate or we can through time or through price, right? So to me, right now, we are consolidating through time in this chart. All right, not through price yet, at least. Looking at some of the major subsectors, SMH, again, right near all-time highs. All moving averages are moving up and to the right. It's good to see. Looking at lumber. So lumber is kind of, it's stuck below this area right here, right? But I was a little concerned last week because we were looking down here and it was kind of breaking down. Well, it undercut the 150-day EMA and now has come back up and it looks healthy again. If we can break out above this 67, 66, 67 range, I think that bodes very well for the stock market. But we are right now currently still under supply. Looking at the put-call ratio. All right, so, we're still kind of, the bulls are still, in control, really. Not much of a shakeout yet, but every so often we are dipping back in. So the market's doing enough to keep the bullishness under control to a point, right? Eventually, will we get something like this, which is going to be probably pretty ugly for the market? Yeah. We're going to get something like this eventually. But for right now, we're clustering up here, and I think it's still in a bullish range. Looking at high yield bonds, so if people are worried about the economy, the market, and so on, they're not going to be buying riskier high yield corporate bonds. And we're seeing it once again test this area of supply here. So if people are buying bonds, good chance that they are still in a bullish mode. Again, we haven't broken out yet, right? And it could get rejected and turn back over. But the uptrend is intact, right? Higher lows and higher highs, right? Boom, higher high, definitely higher lows though. And so we are in an uptrend in the high yield space. Looking at the SPX versus the TLT, right? So SPX versus TLT had this bottoming action look, kind of came up to this area, retested, and now kind of chopping around. So market's a little bit indecisive here at best, but the moving averages have kind of recovered and went from a flat look, which is slightly down look, to more of an uptrend look here. So that's a nice little rotation in the SPY versus TLT range. Now TLT by itself is setting up rather nicely. I mean, we have this nice uptrend, consolidation, and potential, watch for this breakout after this consolidation period. So again, something to be aware of. If TLT is moving higher, that's a flight to safety. Looking at the VIX is still in a bullish range, right? I mean, we're at 14.3. So I use 16.5 as kind of my bullish to bearish indicator. And again, it's a bullish range. Not much to talk about there. SPX versus the rest of the world minus the SPX, closing all-time highs, just tell us that if we're going to be invested in the market, the U.S. is still the best place in the world to be. Uptrend is strong and intact, and again, closing all-time highs on this ratio. Value line geometric index. So long time, if you know this area, let's go back to a weekly chart because it shows it better. So this 500, 510 area was a very important area. Hit it, pulled back, hit it, pulled back, hit it, pulled back, broke out, dipped underneath it, and now we're consolidating above it. We tried to break out back in January. It got rejected, but made a higher low, right? Didn't come all the way back down, made a higher low. So I think that bodes well for the market too. If we can get above this area, right? 555-ish, we'll call it. I think that would show that there's broad participation in this market, and the market will be likely to move higher as a whole. So come in over here back to the daily chart. I'm going to go back to hollow candles. Okay, so let's look at each individual sector. Okay, so we're going to say uptrend or downtrend, right? Or what does it see? And energy is a downtrend, and at an interesting point actually, because this here has held a support now numerous times. I think this is the area that, could potentially cause a bounce, and we could chop around this area, and this moving average kind of bottom and move up, and a breakdown here would be extremely bearish and would be, we could drop all the way down to the $40 range or so. So I think that energy is at an interesting point, but again, it's in a downtrend, not something I want to be a part of. Looking at financials, and if you look at it, hit this area, hit this area, hit this area, and going back to a daily chart to zoom in, what are we seeing? We are closing at all-time highs right now. So financials closing all-time highs. That's got to be bullish, right? Industrials right near all-time highs. Looking at the technology sector, closing at all-time highs. Looking at healthcare, right near consolidating, but right near all-time highs. Looking at discretionaries, again, right near all-time highs, moving averages all moving higher. Communications index, closing all-time highs. Utilities, closing at all-time highs. Looking at staples, closing at all-time highs. Looking at materials, kind of chopping around in kind of a little messy range. All right, and looking at real estate, closing at all-time highs. So what is that telling me in general as a market? Trend is higher. There's no reason to call it top. There's no reason to think that there is a top. Technology remains to be the strongest sector by far. And if you, let me set up. And when you look at the ratio chart, it is closing at all-time highs and uptrend. So I think, in my opinion, that the market's going higher. I think that, yes, we may have a little shakeout. We may have an area of consolidation, maybe even a choppy range, maybe a retest of this, this level right in here, right? That would only bring us back to the 23-day EMA. All the uptrends would absolutely be intact. So yes, it could become a little bit more volatile. Yes, it may have to consolidate sideways for a while, but everything is moving higher. Trends are higher. Every sector except for energy and materials was at or near all-time highs. So it's very hard to be bearish when you're seeing that much participation and that many indexes and sectors closing at or near all-time highs. And even like when you break down IYGs, I love the financial services. I mean, it broke out back in October, and once again, it's closing at all-time highs. That's JP Morgan, that's Citi, that's Wells Fargo, American Express, Goldman Sachs, Berkshire Hathaway. So the biggest of the bigs as far as banking goes and financials go are in this. If they're closing at all-time highs, and semiconductors are closing at all-time highs, and healthcare is closing at all-time highs, or right near all-time highs. Again, it's very hard for me to be bearish this market. Now, we start breaking below these moving averages, they start to roll over. That's a different story. But that's a what if. It's not what we have today in the market. Today in the market, we have everything going higher. Yes, I was much more bearish in this range, right? We had price dip below the 65-day EMA, big sharp sell-off. Yeah, that got me a little bit more bearish, a little more defensive. I didn't sell everything, but I got higher in cash. We rebounded beautifully, got above all the moving averages. Now I'm back fully invested again. It's that simple. I don't hedge personally because I don't like quote unquote wasting money, and a lot of times hedges are unnecessary. I'd rather be in cash. That's just my personality. A lot of people hedge, and they do, they're very successful trading that way, and so it works for them. For me, I'll just go to cash, chill out for a while, watch the market, and make a watch list. Anyway, so I hope this helped you. Again, my opinion, markets are in a strong uptrend. Yes, we could chop sideways for a while, but as of right now, I don't see any danger on the horizon. That could change on Monday. We will see. Anyway, hope you guys and gals have a great day, and good luck trading this week.